Sullivan. I'm a former IRS agent and teaching instructor. I worked at IRS over a decade. Welcome to my YouTube channel. Me and my M&M men give you really thumbs up for listening today. I'm a national expert in IRS resolution matters. I've worked 10,000 cases. I've been on all the major news stations, not to pat myself on the back. I just got to put a layer of credibility. Not that that's much, but anyway, today I want to talk to you about the designated a payment to go to trust fund. This is a real hidden secret that really needs to be exposed. Uh, my YouTube channel isn't based on cases that I've worked against IRS. It's actually the inside information I'm giving you on how to deal with IRS, so you hear it from an insider going out, not someone who's practiced and kind of picked up tips along the way. That's what you have by me giving you information. So you need to know that if you owe payroll taxes and they're 941, IRS can impose the trust fund penalty against you. That is, IRS can assert the withholding and 1/2 of the Social Security against you personally. So if you have a $100,000 tax debt, probably, I don't know, $70,000 of that is money that comprises of the withholding and 1/2 of the Social Security. They can take that half of that debt and transfer it to you. So there's a little known fact, though, that if that $70,000 is going to be asserted against you, if you're making a check out from your corporation and you put on the bottom of the check, monies to be applied to trust fund only, IRS must take that money as they apply it against the corporate debt. They must give you credit for that debt on the personal side as well. So if I have a 941 liability and I'm a corporation, I'm going to make sure all my payments I put on the bottom of my check, monies to be applied to trust fund only, because IRS must take that money, and not only do they give the corporation a credit, that goes down against my inevitable trust fund tax. So it's very important you understand this. If you have a trust fund liability, you have a corporation, you're making payments to the IRS, simply write on the bottom, monies to be applied to the trust fund only with your business ID number, and IRS will give you a credit on your corporation. It's a payment, but they're also going to reduce your trust fund tax penalty liability debt. So basically, let's say your corporation owed $100,000, and of that $100,000, $70,000 was going to be moved to your liability as well, your personal responsibility liability. If you wrote on $70,000 checks, monies to be applied to the trust fund only, you will no longer owe the trust fund tax penalty for you individually. Your company would still owe $30,000. You are now off the hook. The value of writing on that check, monies to be applied to you, is very critical and excellent information for you to know. If you like my YouTube channel, please subscribe. It lets YouTube know. That's how YouTube knows we're doing a good job. That and likes. If you have a question, ask it. Give me a comment. You want me to talk about something, email me. My email is there, and I'll make a YouTube out of it. Thank you so much for listening. Subscriptions, I love you.